Now, we were talking before about getting things done, weren't we? And it requires a little bit of persistence, going from an idea to something that really works. That can require a lot of fortitude and keeping going. I always think of WD-40, the household lubricant. Some of you might know why it's called WD-40. They had 40 goes at it, 39 failures. WD-11 was crap. WD-25 was reasonably shithouse. But they knew they had something good and they kept going and eventually they got there. Makes you wonder about the Boeing 747 too, I guess. But they eventually got there with that. Something about Amanda was saying about assumptions and about being close to your customer. We've got to be so careful we don't assume what customers want these days, I reckon, because everything's changing so quickly. You might be making an assumption that's kind of outdated now that might have been valid a few years ago. We had a tradie come to our house, a plumber, the other day to give us a quote on some work, and he looked at it and he was speaking to me and my wife, but we were both there, and he would only, I've noticed this in tradies a bit, he only had eyes for me. He would only make eye contact with the guy because I guess he assumed I was the decision maker. How wrong he was. How foolish he was. My wife was the decision maker. I knew that, she knew that. We maybe should have had a sign on the front door. But I tried to help the guy out. Like I was kind of, like my wife was there and he was talking to me and I could sense my wife getting more and more irritated. So I kind of looked at it and I was kind of like, and then eventually at one point I started to move behind her to try and draw his, but he just kept, oh, and another thing, yeah, so he didn't get the job. So assumptions that we make, very important. We've got to be aware of them. This panel session, how the fintech community is enabling growth and innovation. The market is changing, the industry is evolving. How can your business change in a way that gives you an advantage rather than being reactive and being dragged into change, perhaps being swamped by a wave of change rather than surfing it? What role does meeting your regulatory requirements play in change? There's going to be a panel discussion that gives you tips on how to deal with changing market by showing how the fintech community is responding. It was going to be hosted by Simone Joyce, chairperson of Fintech Australia. She sadly has got, everyone, COVID, unfortunately. But instead, we have the very able and skilled replacement, Evan Craig, the CIO of Cuscal. Been there 5 years, worked extensively in delivery and strategy. He is ready for this. He'll come up in a moment. But can I get the panellists to come on and I'll introduce them as they come. Adam is nearest to me, Adam Theobold, founder and CEO of Automentum, renowned Australian entrepreneur, co-founded Hey You, used to be called Beat the Queue. I use it every morning. Hey You, strut past the queue. How good was it the other day? There were 8, so I pre-ordered, right, and they prepare it, tell you when it's ready, and the slogan is Hey You, strut past the queue, and there were 8 people in the queue. Losers. Losers. Just push the swear barrier a little bit. That's what I was thinking, you losers. Strut. Yes, and they're all looking at me like, what are you doing pushing past? I'm like this. Get it? It's so good. Look, it should come. The benefits of it are coffee, but also ego.
Yeah, that's true.
Yeah, so the ego is a great thing for it. Adam has now co-founded Automentum, an ordering and payment app for venues and suppliers, grown to 35,000 venues, 600 plus suppliers, and over 2 billion in orders transacted. No doubt got some ego benefits too. In the middle is Ramel Gokani from Xi. He is Xi's Chief Commercial Officer, responsible for driving the growth of Xi globally during sale. Sorry, I don't have a story about Xi. I'm sure they're awesome too. I just don't have a personal experience story. But he also drives the commercialisation of Xi products and services and 15 years experience in financial services and technology. Tim Wilkes from CoinSpot, fintech professional, over 10 years experience working across marketing, product and strategy, passion for the ever-evolving landscape of currency and blockchain, currently responsible for growth and partnerships as Chief Business Development Officer at CoinSpot, one of Australia's leading cryptocurrency exchanges. I've already introduced Evan. Take it away, Evan. Make them all very welcome.
Thanks, James. Really appreciate it. So, as you all heard, I'm the ring-in today. Some of you may have seen me earlier with a sling on. I've told the story of surgery, but it was actually Bianca twisting my arm to be the ring-in today, so thanks, Bianca, for that. Fintechs is probably an easy subject for me to talk about as the CIO of Cuscal, so I'll give it a crack on behalf of Simone. Today we've heard some great stories about innovation, conversations of diversity and client needs, delivery of thought leadership, and the curiosity to apply different capabilities differently. The diversity of creation of epic experiences, Amanda mentioned, requires you to invest in the experiences, but how do you invest in every experience? How do you invest in every fintech, every disruptor? Because at some point, if you invest in every disruption, it obviously becomes some sort of a distraction for you. So partnering is going to be a real key capability. It certainly is for Cuscal, as we look at a build, partner and buy strategy. And many of the banks need to sort of think about that from their point of view as well. I think it was noted last year from Simone's notes that EY, in the census, recognised fintechs as partners as opposed to competitors. So the Venn diagram that we've seen very early this morning, I think from Brett, sort of showed the overlap and how that perpetual investment is actually really important to complement your services as well. So fintechs play a pivotal role in the consumer problem. So they really play to the heart of what the consumer issue is, and most large financial services organisations tend to look over that a little bit. So the idea of someone that's playing close to the consumer enables them to, I suppose, get some speed out of that by partnering and getting too close. So why would the banks look at fintechs? So they get access to markets they previously may not have been engaged in. They get to evolve product and service offerings without the overhead of investment, and they alleviate costs and processes involved with building it themselves. They can unlock new revenue streams and deliver commercial potential from there. But there's a key to getting it right. The mindset must be aligned between both organisations. The procurement must be aligned and very early called out, because you've got to go in it with the right reasons for both parties. The commercials, they seem obvious, but they need to be right from the start. And the time to market. So you can get caught up in contractuals, and commercials can actually delay the point of missing the market. So Cuscal and financial institutions have the opportunity to partner, as I mentioned. It allows us to compete and accelerate consumer value. I'm joined by a fantastic panel today, and I'm going to step through some questions for them, and hopefully you can get to learn a lot from them. So I'll ask each to introduce yourself. So I'll start with you, Adam, if that's okay. Just take some time to tell us about yourself.
Yeah, no problems. You guys have already met me, but my name's Adam Theobold. I founded Beat the Queue, which became Hey You, which is a coffee ordering app. Hands up those in the room who've used Hey You before. Thank you very much. You're very kind. For those who haven't, where have you been? Hands up who has been at a cafe or restaurant in the last 3 months. Awesome. Okay, so the rest of you use my other app. So my other app is an app called Ordermentum, and we connect hospitality venues with food service suppliers, and we manage the ordering and payment. Unfortunately, I'm not very bright, so I basically took Hey You and did it again on the other side of the same customer. But that's me.
Thanks, Adam. Rimmel, if you don't mind.
Sure. Hi, everyone. Rimmel Gokani, Chief Commercial Officer of Zai. We're a global payment orchestration platform, about 7 years old. Not me, the company. We've had a pretty good growth curve. We're about 250 people now. We added about 150 people just last quarter alone. We're in 7 countries, founded in Melbourne, but going through a pretty large growth curve at the moment.
And lastly, Tim.
Yep, Tim Wilkes, Chief Business Development Officer at CoinSpot, one of Australia's largest cryptocurrency exchanges. I feel like I may be a little bit of the oddball on the payments panel, but hopefully I can provide a bit of a different perspective on all the innovations that are happening in the blockchain space. As well, it's been a very exciting space in cryptocurrency in the last 18 to 24 months, and our company's had a lot of growth as well, so it's an exciting time.
Thanks, Tim. So I guess me too, James, I need to spend more time with Rimmel because I am a Hey You customer, I am a CoinSpot customer as well, so I'll have to learn more about Xi. So Adam, if I could start with yourself with this very specific question. The differences between a fintech and a bank is the speed and agility at which they actually achieve what they set out to start. This could be extremely advantageous for a bank, and working with a fintech to address this. So can you tell us about Automentum's response to the pandemic?
Yeah, absolutely. A couple of questions all in one. I mean, I think our job as scale-ups or startups is to be experimental and to use what's out there to create new customer experiences. Quick backstory. I mean, back when I founded Beat the Queue, you guys would remember a time when you used stored value credit for these services. So that's where you'd use a $20 top-up. And it made absolutely no sense to anyone why you would top up with $20 with some crazy little startup that was going to order you a coffee. But you did it, thank you. And the reason you did it was because it was the only way in which you could start to transact digitally in that environment. And the reason we did that was because none of the businesses like mine that were trying to prove up this use case, which was essentially a micro-transaction, could do it cost effectively. I was paying 20 cents for every time you put your credit card in, and 2.5% most probably. And what I had to do, just an example of working in this space to try and prove up the use case, was I knew that microtransactions were going to become a thing. This was before Tap and Go was a thing. I'm that old. But it was this world where microtransactions were happening. It was going to happen. I decided that we were going to actually wear that 20 cents per debit, even when you were buying a $2 coffee. Now, yes, coffee cost $2 back then. Now it's 10. But that's what I did in order to prove up the use case of, do people want to place an order and pay for their coffee before they arrive at a venue? And specifically to the point around the pandemic, I mean, we should have died 100 deaths during the pandemic at Automentum. Our business halved overnight when lockdowns were announced. Luckily, we did a lot of takeaway coffee. We move about 50% of specialty coffee in Australia, so luckily you all kept buying coffees, thank you. The business kept turning over. What was interesting about that moment was that it actually accelerated payment adoption. So in our network, we process about $1 billion a year in transactions, and about 50% of that is paid for via credit card or direct debit using Xi, who's a great payment partner of ours. So from our perspective, we thought that was going to come under a lot of pressure, but it was the opposite. Suppliers and venues ran at us to digitise their payments. And so to your questions, in that moment, we had to move really quickly to be able to facilitate all that demand.
Awesome. I know working for Cuscal, micropayments are a great thing. Next question I'll take to Rimmel, if that's okay. So Xi is embedded in the payment space. Could you explain how offering a service layer on top of a heavily commoditised transaction market changes the relationship between a business and their payments provider?
Sure. I mean, I think there's been a lot of innovation in payments over the past 10 odd years. But I think over a period of time, payments will become a utility. We saw that in the energy sector about 10 years ago, and now energy is a utility. And I think over a period of time, payments will become the same. So for payment companies like ourselves, we will continue to innovate and add sort of product features to our platform. But over a period of time, we believe that's going to be commoditized and will be utility. And it's that service layer on top that will add a lot of the value to our customers. And that service layer can be around onboarding, KYC, education, clearing, settlement, all the value-add services that businesses need in order to run their business. But the core functionality of payments, though new innovation and new product features are coming out, I think over a period of time, it'll just be utility that we'll be able to support. And it's that service layer on top that will differentiate. And it's not just the value-added services, it's about the education, it's working with customers, working with regulators, and expanding business and services around the world. And I think that service layer is what will differentiate companies in the payment space alongside its competition.
Awesome, thanks for that. So Tim, as you say, you might be the odd one out, but I think it's actually very relevant for this audience. Digital currencies are increasingly being looked at by the big banks, the ASX and even the RBA. How could banks better support or even work closely with companies like yours to create advantages?
Yeah, definitely. I think the first thing I'd say on that topic is that with any of the conversations that I'm having at the moment with different partners or opportunities for innovation, it's always a multitude of entities that are involved in the conversation. So I think the main piece is having as many of the right voices in the room to have that conversation. So whether that be from the banking side or from the government side, from industry, and there's normally, when working on these collaborations, blockchain companies, but also payments partners that are involved in the conversation. So I think having as many of those voices in the room at any one time is going to be the key to that. I think we've got Steve Ellis joining us after this from Blockchain Australia, and I'm sure he'd echo the same thoughts. The industry, we've been in the industry since 2013, and I think when our business took off, the collaboration with payments businesses was an essential part of being able to, I suppose, establish frameworks for us to partner deeper with banks. So I think the complementarity between all of the businesses is the key element there. So yeah, having as many voices in the room as possible.
Yeah, I think it's your growth. It's been huge. I mean, my 18-year-old son introduced me to CoinSpot. He said, "Dad, download this. Get onto Doge. This is going nuts." Yeah, I don't have as much money in that account as I once started with. He convinced my wife too at the time as well, so we lost double down on that. So I'll pose a question to all of you next, and I'll ask one by one. But have a think about this in preparation. I'll start with Tim, because you're on a roll. He thought he was going to be last, but he can be first just to give Adam a break. So why do you think it's important now more than ever to get the right balance for banks and fintechs to work closely? Is it regulation? Is it the infrastructure changes like CDR and Pay 2? Or is it simply the fact that no longer the side hustle, but it's an established part of industry?
I think definitely it's becoming increasingly an established part of the industry. I think that customers are calling out to their banks, to their payments providers for new options because they are either invested in this asset class or they're interested in using it for a whole range of different reasons. But there needs to be collaboration between all of the individual entities in that space to be able to find out where the value is for each of those parties. And working in a silo or working with only one or two parties, you're going to be excluding yourself from some value in that space, but also excluding, not maximising the value between all of the different parties, whether it be traditional banking, whether it be payments, whether it be blockchain service providers.
Yeah, I think it's that. How long is a fintech a startup for before it's not a startup anymore, right? It's becoming just more normal, right?
Definitely.
Rimmel?
Yeah, it's a good question. I think regulation and innovation plays a critical role. Brett, who spoke first, touched on M-Pesa in Kenya, and I was in Kenya when M-Pesa was launched. They had a bit of it wasn't a civil war, but they had a lot of unrest, and there were people stuck in their homes in various parts of Kenya, Mombasa and Nairobi. And that time, Vodafone said, well, we've got 80% of the market share from a mobile phone perspective. Let's create stored value facilities on feature phones, the old school phones, and let's send money using these services. And it's a fantastic use case. M-Pesa, I think 80% of the economy in Kenya runs off M-Pesa. And still off the old feature phones, not on smartphones. And it's a great example of innovation that's born out of necessity, as opposed to innovation that's born out of commercial requirements. And if you look at this market here, it's very different. It's a high banked market. There's not a lot of underbanked people, but there is still a lot of innovation that can come through and shine through. I think fintechs are required to facilitate that. There's great data from the World Bank which suggests that if you want capital investment, capital development in your markets, if you create the barriers of entry too high from a regulation perspective, then fintechs won't be available in the market. They won't flourish. So you need to give them that space. If you give them that space, they will flourish. They will challenge the banks, and the incumbents and the banks will follow. And partnerships are a great example of how that ecosystem can grow together. And Australia, Singapore, Hong Kong, great examples of markets where fintechs, regulators, and banks have really worked together to try and expand those services. In other markets, Middle East, Africa, LATAM, it is all around necessity. And that's where fintechs have generally done a little bit better because innovation out of necessity is always a better outcome.
Thank you. Adam?
It's a great point Rimmel made before about, I think the room would be forgiven for being a little bit cynical about the scale-up logo shirt-wearing guy in the room, and I think That's because there's been a lot of hype around startups and fintech, and I think it's really a time for fintech to start walking the talk. Now, the idea of a new market and excitement and innovation and risk and trying things and failing, that's completely normal and that's what happens. But I think Rimmel's point that the technology adoption curve, the move from being innovative through to infrastructure, I think we're rapidly approaching the infrastructure level of payments. And I think we need to start moving our mind out of this is about technology. It's rarely about technology. It's about customer experience, and it's about creating really simple to use customer experiences. I heard this quote, you would have all heard it before, but it's the idea we're no longer in the can you build it economy, we're in the can you get people's attention economy. People are more time poor, more distracted than they've ever been. And the idea of can we stitch together some technical solutions is not really the barrier anymore, is can you make it simple enough and can you scale it? And so back to your question, I think what that means for me is that where there used to be this gulf between the crazy startups and the infrastructure or the traditional incumbents of banks and so forth, I'd like to think of that stopping and them coming together a little bit more and the noise going out of the market, and it's actually having to deliver value to people now in order to be seen and heard. And I think that's the stage of market we're in now.
Yeah, it's when you go from sort of novelty to actually being impactful when you're not available.
Yeah.
Right, so that's when you really know that you're critical to the environment when your clients are now disabled by the fact that you can't do what you need to do.
I say to my team all the time, every day they come up with a new website that's a competitor of ours, and it's all vaporware. It's people talking about things and not actually doing it.
Yeah.
You've got to look through that and start to add real value.
No, exactly right. Okay, I've got another question that I'll do around the traps as well. So from your perspective, what are some of the best practices a bank could adopt to create close and advantageous working relationships with a company like yours? And I'll start with you, Adam. I'll go back the other way.
There's a pattern emerging.
Yeah, I know.
Interestingly, I think just I talk about our customers in different phases. So we have small, medium, large. There's no tricky names in our business about them. But what we do with a small customer is completely different to what we do for a big customer. We are not really banked at the moment as a business. In fact, one of our banks recently turned us off. They had no real it wasn't because of risk or anything else. They just couldn't place us in their ecosystem. It was hilarious. I'm like, are you really saying that we've got 35,000 hospitality venues, right? You should be talking about how we partner, and you're telling me that you don't want me to use that facility anymore. It was outrageous. But what I mean to say is that I think the best thing the banks can do is actually acknowledge that the long tail of customers isn't actually where you make money. Your long tail of customers is where you treat them to create new solutions, to test new ideas, and to look for the fast emerging big success stories of tomorrow. And so actually identifying that it's not about necessarily profiting off that segment of your customer base, it's actually about building a different type of relationship. And I think that's one of the things they could do.
Thank you.
Yeah, I mean, just on the debank story, we were also debanked as a payments company when we first started the journey, which was interesting, telling all of our customers we no longer have bank accounts. So yeah, I think with banks it has to be a partnership-based play. Fintechs will always innovate slightly faster. They'll have a lower cost of acquisition. So if banks can partner, understand the business models, and work a lot closer, I think they will benefit a lot. I think the industry will always benefit as well. One particular space I think there's a huge gap in the market is in the sort of small scale SME financing area, generally avoided by banks because of lack of data and lack of maturity in that segment. And fintechs have really been attacking that space a lot. And it's a great example. If a partnership were to take place, there's a lot of commercial gain in that particular industry. And I think that the more you can collaborate together, it shouldn't be a combative relationship. Right? It should be a very open relationship. We have a very open relationship with Cascal. Every time we want to try and do something new, we're pretty open, and say this might be out of your purview. It may not be in your risk appetite, but this is what we want to do. And generally, it's been we found a way to work together. And I think that if there's a collaborative mindset, with both parties, I think a lot can be achieved.
Yeah. Totally agree with what the other two panelists have said, and I think the theme of the event, curiosity, is really poignant when it comes to, I suppose, the area that we're in. When you're looking at where the value today story is for our customers or banks' customers, you only really find that out through a really collaborative approach and looking for what the next innovation could be, whether it's on-ramping into businesses like us, whether it's off-ramping via online checkouts, card services, opportunities in the point of sale space. That there is endless opportunity there, and it has to involve as many voices from the bank side, the payment side, and businesses like ourselves to find out where that value is and maximising it across the chain.
Cool. I, like many in the room, are struggling for talent at the moment. Are Fintechs facing the same problem? I'll start with you, Adam. Broke the chain,
You
see?
switched it
Not
up.
AOA anymore?
I had that coming. So I would say that yesterday, yes, incredibly difficult. It's very hard for us to compete on salary. We just don't have enough capital to do so. We've been very blessed with capital, but it's never really cost effective for us to compete on capital. So it needs to be much more than that as a value prop. What I'd say is it's changing a lot at the moment. Very quickly, we're hearing about more candidates in the market. We're hearing about people pausing their hiring plans globally. The innovation or growth sell-off due to inflation fears and everything that you've all read about over the last 6 months is really hitting home in our sector. And there's a lot of very scared scale-ups and startups out there at the moment. It's a very important moment, I think, in this sector about being, hunting profitability, being really genuine. The only upside I can see at the moment is that there's a little bit more talent in the market.
Yeah, I think Cuscal does well at attracting talent by the fact that we work with the Fintechs as well. So, your logos help our logo, so it's always good from that.
Glad we can help.
Rimmel, similar question?
Yeah, similar. I mean, we, like any sort of growth stage company, we can't compete with the salary demands in a lot of markets at the moment. And I think a lot of the offshore centres have become significantly more expensive than they were several years ago. So places like India, Philippines aren't that attractive. We've actually gone to Eastern Europe. I think Mark mentioned it in his comments. So we've set up a dev center in Cluj, which is just north of Bucharest in Romania. Amazing technology talent for anyone who needs technology resources. Fantastic developers. Eastern Europe is a great hotbed of software engineering, and they understand fintech extremely well. There's a significant exodus from other parts of Europe into that space, and we've done really well in setting up a center there. You need to convince someone in your business to go live there. That's a challenge. But apart from that, it's we've seen some really good talent in Eastern Europe.
Awesome. Yourself?
I think there's probably arguments both sides in our business. I think being in the cryptocurrency space, we're maybe viewed as the new fun place to be for
place to work
for many excited fintech professionals. So there has been, I suppose, some fortunate wins in that space. We've also made a conscious decision to over-resource in the operational areas in our business. So in that area, I think we've been quite fortunate in getting some great talent into the business there. On the engineering side, things are maybe a little bit more difficult in that space, but on the whole, I think we've been quite lucky in that space.
So as Fintechs, I suppose, I think, Adam, you spoke how you use Zai as your payments partner. Are you looking for banks or other people like Cuscal to try and join the dots of all the Fintechs to make new solutions or new capability? Or are you looking to do that yourselves and finding partners to try and maybe break new ground between each other?
Look, from my perspective, we're always looking for new experiences. I'm very happy with our payments partners, I should say. But the reality is that, like everyone in this room, we're a little bit beholden to our customers. So there's a little bit of listen and lead. Yep. We're always listening for ways in which we can improve the life of our customers, but we're always trying to lead out. Our customers don't know what Pay2 is. They don't really care what Pay2 is. They just want their money faster. Yep. And through the great work of Cuscal and Zai, obviously, we'll be offering that as soon as we possibly can. But I think the reality is that we need to be nimble. We need to choose technology partners and banks and financial partners that help us be really, really nimble. I like to use the comment that often there's the triangle of speed, sort of features and price are the things that we consider when we're looking at partners. You can't have all three. We're lucky we mostly do. But the truth is that you're always making a bit of a trade on those. And for us right now, it's about being flexible is the number one priority. We need to be flexible because we don't know what's around the corner.
Okay.
Just to be clear, as soon as we get off the stage, he's going to beat me up on price. I guarantee it. Sorry, what was the question again? You could just
So are you looking to try and find other fintechs to make new experiences, or are you relying on the banks and others to try and piece those things together?
I think it's a bit of everything.
Yep.
As a fintech, we can't solve all problems. We specialize in certain components. We will lean on other fintechs to help facilitate in other areas. We partner with a lot of fintechs that distribute payments around the world. We work with other technology companies to do KYC services. So we like to orchestrate a lot. But absolutely working with banks is critical for us, not just Cascale, but in any market that we operate in. Without that infrastructure as a business, we can't operate. If we can't operate, businesses like Automentum or PointsWhat can't operate. So I think that partnership is critical, has to be strategic. And I think as long as banking partners and fintechs understand each other's priorities and product roadmaps, I think it can really flourish.
Tim?
Yeah, and I think from my side, there's being that we're a centralised cryptocurrency exchange, you'll probably hear these terms bandied around quite a lot, but there are decentralised exchanges and centralised exchanges. To Rimel's point, there's many things that we can offer. There's many things that our payments partners can offer. There are many things that traditional finance and banks can offer to their customers. There's many different forms of DeFi products that customers are really interested at the moment that we potentially can't offer directly, but with each of those parties working together, then these seemingly obscure or nascent DeFi products that do have a lot of value for customers can be brought closer to them through the products that we build together with the banks, with partners and payments partners as well.
Did I notice correctly that CoinSpot was a Formula One sponsor the other weekend on the banners?
We did have a motorsport partnership with a Audi R8 team as well. So
yeah. I'm a massive motorsport fan. It's interesting. I was saying to someone the other day, years ago, it was cigarettes and alcohol. Then there was sort of the oil and whatever. Now it's all tech companies, and you kind of know that you've made it when you're sort of sitting on the side of an F1 car. Look, we've probably been through all the questions that I was given and the ones that I made up on the spot. But I really appreciate your time, guys, and thanks for all the candid discussion. I'll throw back to James. Thanks, everyone.
Thanks, Evan. Thank you very much.